Welcome to Money Majlis, the podcast where we explore the frontiers of money, technology, and innovation. I'm your host, Suvo Sarkar. Today, I'm in Istanbul, Turkey, at the Istanbul Fintech Week. And I'm privileged to welcome a true fintech visionary, Sopnendu Mohanty, who's also attending the Istanbul Fintech Week with me. But before I introduce my guest to you, here is a message from my sponsors.
Money Majlis is proudly supported by Aqua, the premier crypto-as-a-service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
Money Majlis is brought to you by E&, a global technology group.
Money Majlis is brought to you by Intellect Design Arena, driving digital adoption in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
Sopnendu Mohanty is currently the Group CEO of the Global Finance and Technology Network, GFTN, a new global platform driving fintech innovation and collaboration. For nearly a decade, Sopnendu served as the Chief Fintech Officer at the Monetary Authority of Singapore, MAS, shaping Singapore into Asia's leading fintech hub and the world's fourth-ranked fintech center. Under his leadership, Singapore attracted over $34 billion in fintech investment, launched groundbreaking initiatives like PayNow, Apex, and Project Ubin, and hosted the world's largest fintech festival. Sopnendu has previously worked for over 17 years with Citibank in Asia and currently holds a number of board positions. Sopnendu is a global thought leader and a champion of financial inclusion, digital assets, and sustainable finance. Sopnendu, welcome to Money Majlis, and good to finally meet you in person in Istanbul.
Thank you. Thanks for having me, Suvo. And we've been trying to connect. It is good to see you finally, and hopefully we'll have some good interaction today.
Absolutely. Looking forward to that, Sopnendu. Let me start with Singapore's fintech ascent. Singapore is now ranked the top fintech hub in Asia and fourth globally, attracting, as I said before, $34 billion in venture capital investment from 2019 to 22. And the number has obviously gone up since. What were the most critical policy and infrastructure decisions that enabled Singapore's meteoric rise, Sopnendu? And how do you see its position evolving over the next 5 or 10 years?
Well, this is a very, very long question, and I hope I don't give a long answer to this. Well, you rightly said that Singapore in 2015 was nowhere in this space, and it took a decade for us to put ourselves in a global map when it comes to fintech and innovation. I mean, I would. When I reflect back for last 10 years, many thought gets into my head. I know the first thing comes to me always has been that to establish something called trust. And for Singapore, it was critical to play a role of a trust anchor in this space. Fintech are normally, if you look at fintech founders or fintech products, they're very targeting very small piece of a financial system.
Correct.
They're backed by founders who perhaps have never done any entrepreneurship. They are passionate people. And for them to operate in a very competitive financial sector needs a lot of trust. And Singapore's first effort over the last 10 years was to build that trust ecosystem. So that's one. The second piece I would think is that our desire to collaborate. Being a small country, we just can't do alone. So our DNA forces us to collaborate with the market. And when you collaborate, fintechs find that particular country a great base to extend their market outreach because the country itself wants to collaborate. So building a network of partners and collaboration around the world provided fintechs a lot of this efficiency gain by being there to do business outside Singapore, also as they came and operated out of Singapore.
Yeah.
That's so collaboration, building the network became the second factor. The third factor, I would say that we just accepted as regulator, as people who came from a traditional financial sector, we don't understand this space. Just accepting that we don't understand and then open up a public-private partnership builds that opportunity for us as a policymaker to think about policies in a more open way. And that openness in our policymaking created that necessary environment for people to come and start innovating for things which they would have struggled elsewhere. So open policy framework, because we just accepted we don't understand things, allow that collaboration to kick in. The last piece, I would say that public infrastructure, and this is something not unique to Singapore. This is an inspiration we took from India. India perhaps demonstrated world's most successful digital public infrastructure. So we also built those necessary digital public infrastructure, not only for Singapore, also make it interoperable around the world. Did created that opportunity to scale where we are today.
So Sopnendu, that's obviously four things you said. You said trust, you said openness, collaboration, and digital infrastructure. On these 4 points, how does Singapore's regulatory environment differ from other leading fintechs, let's say London, New York, Hong Kong, or Dubai? What unique strengths do you think you brought into the picture?
Well, if you look at leading financial center, the regulatory arbitrage or policy arbitrage is not that much. The difference, I would say, Singapore brought is that the speed at which we intervene in the market. Sometimes regulators may not intervene in the market at a speed you expect them to. They may be more cautious, they may be watching, they may be understanding at a speed which may not be the expectation of the market. Now, we used our sandbox framework in a way to intervene in the market quickly. Now, almost every country nowadays have got a sandbox in play. But having sandbox in play is not the only thing, is how quickly you respond. So one thing Singapore did, perhaps, in hindsight, we responded to emerging innovation very quickly. That's one. Second thing, we from a policymaker perspective, I use the word called, we do policymaking through experimentation. Because in the world of technology today, every 6 months, tech refresh is coming to the tech stack.
Correct.
Now, if we think about putting a policy framework, responding to a particular tech stack, if you take 3 to 4 years to put something formally on the public domain, the tech would have become legacy by the time. So the speed of tech change and the speed of policy change has to come closer to each other. And it's not easy to change policies every 6 months. So what Singapore perhaps did in hindsight is to find a smart way to make the policies adjust to changing tech, innovation, risk management. I'll not say real time, but good enough to be able to respond in an effective way.
Now, when you look back, Sopnendu, at your tenure of 10 years in Singapore with MAS, which are the initiatives you're the most proud of? I mean, which are the ones you think have had the biggest impact on the daily lives of Singaporeans and on the broader fintech ecosystem?
As a Chief Fintech Officer, almost every project is my favorite project. But given you asked this question and I have to respond to that, the one which every day reminds me that I was part of this wonderful thing is Pay Now, which is the payment infrastructure we built, which allows people to pay each other by just putting their mobile phone number or national ID. And why it is meaningful? Because when I go to a shop, they says, can you pay now? When I go to the e-commerce website, they say, use Pay Now as a preferred method to pay. When I meet our helper or a handyman or a small vendor, they say to me, can you pay us through Pay Now? And when they say that, I feel that I have made a difference in their life. And it touches me every day. So every day, in some form and shape, I meet people with whom I transact, and they prefer pay now because it is efficient, it is cheap, it meets to their need. So putting something out there where people on the daily life find it very useful gives me an immense pleasure.
Amazing.
And that's what I would rate as my not as favorite, but something which
Most significant achievement.
which makes me think about it almost every day.
Excellent. But tell us a bit more about Apix and Project
Okay.
Ubin.
One of the challenge in the financial sector. So you have come from the financial sector background, having worked in SCB for so many years. One of the challenges for our financial sector, and maybe a step back, so maybe I'll use this as a better context.
Yeah.
In 2015, when we started our fintech journey,
Yeah.
I'll tell you a funny thing happened to me. Within 6-7 months, I was almost disheartened, and I was saying that what I'm doing because that market was so small, and when you have a small market like Singapore, and fintech is trying to solve a financial inclusion problem largely, Singapore was neither a case of financial inclusion nor a market of growth when it comes to retail finance. That's where fintech were predominantly playing.
Correct.
As against India, China, emerging market, even Indonesia, Thailand.
Yeah.
So I was wondering, what should I do? Because market is not big enough. We are a well-banked country. So the only option for me that time was that, how about flipping the fintech who are competing against the financial sector to become the friends of financial sector? And that led to the creation of a new class of fintech called B2B, business to business fintech. There are two kinds of fintech. The fintechs who compete, fintechs who want to work with the bank to help banks to digitize faster.
Correct.
So how about Singapore focusing on the second category, where fintechs can be a partner to banks to digitize faster? To do that, we need to put a platform in the public space which allows banks who are regulated very, very diligently and strictly by MAS in Singapore on something called tech risk management process or outsourcing guidelines process. Now, it's not easy for a bank to just call a fintech and say, I like your solution and please deploy.
Yeah.
Because this fintech you're calling is perhaps 2-year-old company. They have no credential. They have no implementation history.
Yeah.
So how do you create an ecosystem or a process for people to come to the banks and deploy a solution? So that was the reason why we created Apix. Apix became a public-private platform where banks and fintech can collaborate in a safe way before getting into the production-grade system. And that facilitated a growth of fintech in Singapore. Today, Singapore, which had almost zero investment, today attracts billions of dollars of investment because we're the largest B2B market in the world, in Asia, at least in Asia.
Yeah.
And large part of that was driven by putting platform like Apix in production.
Tell me on that point, Sopnendu, what do you think are still remaining challenges of a bank fintech partnership?
I think to me, there are a host of, let me say, banks have moved way, way beyond where we saw 10 years back. And today, if you go to any bank, the technology progress, I would say largely have the same culture of a fintech company, want to fix things, want to innovate, want to do things better. The challenge for banks always has been that in 3 spaces: talent, alignment of leadership or management with the need for innovation, their ability to respond to regulatory expectation, because the regulatory expectation on technology risk management is quite tough.
Yeah.
I must admit.
Yeah.
And any failure by the banks attracts penalties or action.
Yeah.
So they're very cautious. So the regulatory expectation is a second burden. And third is, which I always I'm very sensitive when I say this, but let me put in a way it doesn't sound that bad. Banks don't have enough budget to focus on innovation. Why? Because if you look at any tech budget of bank, largely the money goes in paying for depreciation of large implementation.
Yeah.
Remaining budget, 30-40% of budget goes in responding to regulatory needs. So they have left with 10 to 5% of budget, which is predominantly focused on trying something new. today, if you come and how do you expect them to compete with a growing fintech where VC money is backing innovation?
Correct.
So the allocation of capital is a third, I would say, challenge for
Between
bank.
run the bank and build the bank.
Even build the bank is still, when you say build the bank, it is also considered as a large implementation. I would say within the build the bank, a portion of money going where you don't expect any outcome.
Got it. Yeah.
Or a long-term outcome.
Yeah.
So that money is hardly available for CTOs and CIOs of banks to really indulge.
So on that point, Sopnendu, when I interviewed Piyush Gupta a few months back and was asking the same question to him, he said often for fintech or innovation investments, you cannot look at ROI on day one.
That's
the mistake that a lot of banks and bank CFOs and CEOs do is to focus on ROI from day one.
Indeed.
You agree with that?
Yeah, absolutely. Man, that's the point. There's an ROI expectation which should not be there. Second, there are things going to fail. So banks must find a way to work with the regulators to say, I'm doing this experiment, this sandbox. There's a way to get this thing done. So ROI, regulatory expectation, good communication, customer communication management, the whole thing come into play, especially for banks who are highly regulated to do innovation.
There is a view that really innovative fintech, once it gets into a bank's structure and process and thinking, the innovation gets killed with the risk management philosophy of the bank. How does a fintech work with the bank and still maintain its innovative spirit?
Well, risk management is always a challenge, even outside innovation. Even a product innovation or anything, risk management always takes the extreme view.
Correct.
I have not seen in my life where a risk management approach is balanced. They always tend to be at the side of caution, more conservative way to look at things. Now, without naming, many a time, if you look at the history of innovation, it is a failure of risk management to understand innovation, allowed innovation to prosper.
Interesting. Now you worked.
So the history has shown there's no magic pill for risk management to come and manage risk in the way they would like to, and still innovation survives. So somehow a lack of understanding has created an opportunity to something to come up. And there could be an occasion where a certain degree of thoughtful risk management could have allowed some innovation to grow. But I'm still struggling to find a method for risk managers to find a space for innovation to grow.
Now, tell me on that point, Singapore is known as one of the toughest regulators in the world.
Indeed.
In terms of standards. You were there for 10 years trying to create the fintech ecosystem. Must have been a big challenge, right?
Well, it was always a challenge. Of course, as when you come to a regulatory environment, the challenge doubles. Because one hand, you are dealing with, inside the regulatory environment, a certain cultural values, which is risk averse, which I respect a lot because end of the day, they're held accountable to public on how they manage banks. And second time, you are pushing innovation to a sector which has a history of not innovating that much in the speed you expect. So there's a double challenge. So my approach always has been that, largely I must thank MAS to have given me a wonderful opportunity to do what I wanted to do. Second, there was a progressive recognition within MAS that this space has risk. MD Ravi Menon and his team took time to understand the challenges in this space. So I would say MAS clearly went to the space with understanding risk as part of this play. And all we have to focus that we are transparent. We work with the industry. We picked up projects where we understood the issues to the best we can. And we're quite open about things when things go wrong. So having this public-private partnership with a strong transparency, open exchange, allowed some of this risk to be mitigated by just good communication. So I think somehow magically, I would say things worked out. The community was great. Banks were quite supportive. CEOs like Pius did helped me a lot in allowing me to do what I want to do. And of course, my regulatory colleagues were more than kind to me than I would have expected.
Look, congratulations. You were probably probably the best known chief fintech officer anywhere globally. My question, Sopnendu, you are an engineer from India. You worked in Japan for 17, 18 years. How does those two experiences help you do what you did?
Well, part of the Citibank culture has been that while I worked in Japan largely, but then also moved to Asia, I looked at operations, I looked at business development. And the city experience of running different businesses, different functions does create give that base of foundation for to do what I need to do in my next 10 years. But large part of and I'm reflecting on myself, actually didn't come from my professional background. It came from my own upbringing from a small town.
Really?
When in India, when you grow up in a small town, you are resilient by every day. Every day you're dealing with unknowns. Your expectation is close to zero because you can only see what you can see in a small town. So everything comes to you in a positive way. You take it as a gift to your life. A blessing.
And which small town was that?
Balasore.
Balasore, okay.
So everything comes is a blessing. So you value every piece of positive news. And in that value creation, in that value building in my brain, that to expect nothing, anything comes is a blessing, and things can go wrong almost within the same day. Created this strong mental resiliency in my brain, and that carried on throughout my life. So there's a small town advantage. There are a lot of disadvantages to come out from small town, but one thing small town kids have, you can't break them.
Absolutely, I agree with you. I come from a small town of Dhanbad. Like you know, Balasore and Odisha, Dhanbad is in Jharkhand, then Bihar. And I agree that we have far more resilience in us to get things done. So congratulations on that. Now, you worked in Japan for what, 1.5 decades?
Yes.
I have always struggled to understand why Japan, having been a powerhouse of innovation in 70s and 80s, and maybe some part of the 90s, lost out in fintech innovation in the last 2 decades. What do you think is the reason for that?
I think partly it's because when the need for a change is not so apparent, you don't change. I always say one of the wisdom over last 25 years of professional life, or 30 years now, is that you should make change when things are going good for you. Never make a change or try new things when things are not going good for in anything you do. I think Japan financial system runs on a very smooth conditions today. Over last 10 years, when you compare against other market, and the need for change perhaps was not so clear. That's one, I would say. And second thing, somehow, for some reason, the tech part of financial sector was perhaps the lowest in terms of modernization among other sectors in Japan. And if you compare to Japan's manufacturing, Japan's engineering sector, they're still competitive. They are quite innovative. But when it comes to bank, they're just stuck into an old system. Whether it is a policy conducive challenge, whether it is a just simple, I would say, inertia issue, whether it is a talent refresh is required. There are many factors we can attribute why Japan has not shifted. But if you have to pick few of them, I think would be talent in the industry, inertia, and today, if I look to Japan, last 2 years or last 3 years, Japan is really changing in a big way. You look at Japan's intervention in this space, whether it is digital asset the desire for pushing through the own public infrastructure, the regulatory participation. If you look at FS's own participation in global discussions, global dialogues, is perhaps one of the most active regulator today in the space of innovation. So I would say last 3 years, things have changed. They're also looking at upskilling. They're also looking at partnering with not traditional tech company to do that tech refresh. You look at some of the payment apps in Japan today, they're pretty much as good as any apps in other Asian market. A lot of collaboration with India in that space. So, and also talking India and Japan, India is actually doubling down on the partnership, both on talent side, tech side, and some of the economic corridors. So you will see this new financial corridors, economic corridors, change in the regulatory view, working well for Japan. Well, they can always catch up. It's going to be my second home always in my life. And if one country has cracked the value of trust outside Singapore, it is Japan.
But going back, Sopnendu, to your earlier point about if there's no need for change, innovation suffers. Wasn't that the same thing in Singapore in 2015 when you started?
So
comfortable city, everything's going well.
Singapore has strangely it's a country which is highly paranoid about their own success. While we were doing, part of the reason why Ravi Menon, the then MD, was looking for this dramatic shift in the financial center's scope of work was because he believed that Singapore needs to do something different. But for Singapore to completely come bold with the fintech office, the chief fintech officer, opening of multiple discussions in the market from public infrastructure to experiments. We are the first regulator, if I can claim, who hired a set of people who are writing code on the public domain. So Singapore, from going very slow and taking a hockey stick approach immediately, clearly demonstrate Singapore's ability to respond to the changing market need with a lot of urgency. But we're a small country, we can respond faster. But large country may not be in that position to respond quickly.
Correct.
So I would give a large part of this shift to the size of our country.
Just shifting gears, Sopnendu, Asia leads the world today in non-cash payment growth at 20% year on year. And Singapore is at the forefront of cross-border payment projects like Project Nexus. What are the biggest hurdles in your mind in building seamless cross-border payment infrastructure? And how close do you think are we to interoperability across Asia?
So it's a question which I always love to answer, because if one thing I could not solve over the last decade is to fix this cross-border payment issue. While Singapore, in my watch, attempted to be the first country to connect the our domestic payment system with India, outside Singapore, with India, Malaysia, and Thailand, to project through our bilateral corridors. From Pay Now to Prompt Pay in Thailand, Pay Now to do it now in Malaysia, Pay Now to UPI. And that led to Project Nexus. But I still believe the friction of cross-border payment is so deeply systemic in the system that it is still not reaching that end state we want to. Now, what are the problems? Of course, a problem which is easier to solve but very expensive is upgrading domestic payment networks to ISO standards and building the right tech stack for connecting. And that cost should not be underestimated. Many countries, also half of the world, would take the list of the countries we have, can't afford to upgrade the systems, payment system to the level which you would like to. So expensive upgrades is a big deterrent to that whole change. Second, banks' own tech refresh. When you make a payment infrastructure change, all the participating bank have to make the necessary changes. In a large emerging market, how many banks you think can afford a budget to make a change for a payment system in this timeline you want them to do? Very challenging. Third issue, the existing beyond central bank or beyond financial regulators remit, there are many regulations which drives which can impact when you move money from A country to B country. And having a regulatory alignment within the country and with the counterparty is tough. It took us, while we had an identical system in Singapore and in Thailand, PromptPay, Pay Now, it took us almost 2 to 3 years to connect. The systems are identical. What are the difference? Policy. Now, if two countries bilaterally taking so much time to get the policy alignment, imagine globally if everybody has to talk to each other, how difficult for policies to get aligned. It's a big challenge there. And the last piece, I would say that that the process in which you settle the corresponding bank, they're not going away. They're still going to be there because that problem has not been solved. Non-dollar transactions is, while some people are making a noise about it, but I think the fact is when you move money, dollar is the most preferred way to move money. So there are these currency challenges. So I would say infrastructure, policies, cost of change is a huge, huge barrier to cross-border payment simplification. Well, I'll end this note. One thing I'm quite on the face, which many central banks have to start finding a path to get it, is stablecoin.
Stablecoin.
I personally believe stablecoin has every attribute to solve the cross-border payment, at least for low-value payment between countries. Well-regulated stablecoin by the central bank, by the regulator. Could be the way to get it done.
In fact, so happens coincidentally, today's Financial Times has a big article about are stablecoins the future of finance.
That especially low value transfers, I think stablecoin is the answer. Well, I still believe large value doesn't necessarily have to go through an instant payment system because there's a lot of the risk involved. But especially low value transfers should have a better way. And to me, stablecoin is perhaps a very credible path forward.
And even on trade, you started doing work with blockchain, right?
Yes.
In Singapore. How far has that gone?
Well, trade on the blockchain side, I would say we have progressed quite rapidly because today, many of the banks and many institutions are in some form and shape have implemented an enterprise-grade blockchain for real use cases, not any fancy pilots. The challenge for blockchain was always the currency on which the assets will be transacting. And MAS has its own project called Project Guardian, GL1, Global Layer 1. These are very large multi-country partnership project, which is focusing on building the necessary regulatory governance or infrastructure upgrade on public blockchain, but permissioned. So once that comes in, you will find banks, financial institutions going to use more blockchain at a scale which all of us can't even imagine today. Because if the future of the world is going to be tokenization of assets, whether it's bond, equity, deposits, you need a blockchain permission network, but at a public scale. So public permission blockchain would be the future infrastructure which all this asset will be transacted and scaled.
But isn't the challenge that blockchain requires every part of the chain to convert? Now you can convert Singapore. How do you convert every other part of the world?
Interoperability, that's why going to adopting known public blockchain could be way forward. There are only 2 or 3 who dominate the market today. If everything goes fine with the GL1 and all these projects in play, and regulators find a way to allow banks to transact on large public networks today, which is well known, we should be able to get through this challenge. The challenge today that because there was a lack of clarity, there's a huge proliferation of private blockchain, which are highly they cannot interoperate to each other.
Correct.
So that was the challenge. Now with regulators acknowledging that public blockchain is the way to go, I think this problem will not be a problem in the near future.
Understood. Now from blockchain to cryptocurrency, a quarter of Singapore residents now own cryptocurrency. How does a regulator like MAS balance innovation with consumer protection in this very fast evolving digital space? And what lessons can other countries learn from Singapore?
Well, we went through our own challenge because we are quite open on this space, but also we responded to the growing risk, especially scam, fraudster, market instability, price fluctuation, and we thought that this product needs a strong intervention from regulators. And if Singapore has perhaps one of the most strongest regulation for consumer protection when it comes to retail cryptocurrency, advertisements are not allowed, and we come very strong when it comes to consumer protection, especially for retail investors in this space. And we learned through this process. We allow institutional investors. We allow people from a risk-based people who understand the risk associated with that to do business in this space. So our approach always has been innovation, no issue, real use case, good regulation, which is primarily anchored on three things: know your customer, consumer protection, terrorism financing, anti-money laundering checks. If we bring all these three pieces together without any compromise, of course, the tech risk and the cybersecurity issues, I think having a strong regulatory coverage, supervision on a crypto industry, not bad. It brings trust, long-term growth to this market.
Absolutely. And this is a good time for a commercial break. But before I take you to my sponsor messages, let me remind you to take a moment to visit my giving website, give.moneymajlis.com, and redeem your free $50 gift card for a charity of your choice. Earlier today, I presented my guest, Sopnendu, with a $1,000 gift card, and he kindly chose to contribute it to the Orangutan Conservancy, one of the 6 charities on my giving website. Not a surprise, given that Sopnendu has spent a lot of time in Asia, which is the home of orangutans. You can choose the same, the Orangutan Conservancy, or any of the other 5 charities on the site. See you after the break.
The financial world is changing fast. Institutions need to meet the growing client demand for crypto financial services, but they need a battle-tested platform to build upon.
AquaNow is a leading crypto financial services platform, powering incumbent institutions to launch crypto brokerage, payments, and remittance services for their clients, securely and at scale.
Be part of the transformation. Visit aquanow.com today.
The end touches your life
in more ways than you can imagine.
You want more tech,
More speed.
more convenience,
More entertainment.
more business solutions,
Ian gives you all that.
and so much more. And go for more.
Parents teach their children to talk, to walk, to ride, to read. So why not teach them about managing their money? Introducing the all-new Live Light app, designed to teach 8 to 18-year-olds good money habits. A free and totally secure app designed for them that's always under your control. Top up their cards, set limits, assign tasks, and reward them with allowances. Download the LiveX app to open a Live Light account in minutes, and the first 50 dirham allowance is on us. Visit live.me today. Live Digital Bank by Emirates NBD. Trust and innovation combined. T's and C's apply.
Money Majlis is brought to you by Intellect Design Arena. Intellect drives digital adoption in banking and insurance. Leverage emac.ai, the most comprehensive, composable, and intelligent open finance platform for banking and insurance transformation. Intellect Design Arena.
The end touches your life
In more ways than you can imagine.
You want more tech,
More speed.
more convenience,
More entertainment.
more business solutions,
Ian gives you all that.
and so much more. And go for more.
Money Majlis is brought to you by Network International, the Middle East, and Africa's digital payments champion. We make business happen and economies prosper by simplifying commerce and payments. Trusted by over 250 banks, fintechs and telcos, and 130,000 merchants in over 50 countries. Bringing you tomorrow's payment solutions today.
Welcome back. We are in conversation today with Sopnendu Mohanty, Group CEO of the Global Finance Technology Network and the former Chief Fintech Officer of the Monetary Authority of Singapore. Sopnendu, let's move to AI now. Asia leads globally in AI adoption in financial services, with 80% of institutions launching AI initiatives. How is Singapore leveraging AI and RegTech to improve supervision and compliance? And what are the biggest risks and opportunities you think exist in this space?
Well, we came with a policy 3-4 years back called FEAT, Fairness, Ethics, Accountability, and Transparency in implementing AI. It was quite a path-breaking policy intervention because it captured all the risk we today associated with AI. The challenge for us was always not the policy framework, because we always knew that either Singapore or EU will always find strong policy response to new technology like AI.
Yeah.
The challenge for us was, so what? We have a strong policy. Somebody has to implement it. Somebody has to code for it.
Yeah.
Somebody has to write a necessary software to ensure that these deployments are done complying to the expectation of the regulator, whether FEAT, fairness, ethics, and accountability and transparency. So we started a project called Project Veritas, which was a public-private partnership where the industry came together along with the regulators from our supervisory side and development side, and created that product where each of the elements of fairness, ethics, accountability, and transparency were all targeted as an open source code to test for different use cases. And that was a multi-year project, and that created the necessary pathway for AI to be deployed responsibly in Singapore. And then came the Gen AI. When Gen AI came in, everything changed. The risk parameters changed. And now it's no more the 4 issues. There are I think it's now 12 risk parameters now due to Gen AI coming into the space. So every time there's a extension of the risk, we have responded in MAS with a project, with a public-private partnership, where we put source code, policy expectation, risk management, implementation as a kind of an open sandbox to do. So after Veritas, we had subsequent projects which is focused on helping industry to adopt AI in a responsible way. So this has been almost like a method or a toolkit or a response standard of MAS. New technology, new innovation, new risk. We come with a fancy project name and we kick off a public-private partnership and collaboration. We understand the risk, we code to it, and then we make necessary policy response.
And will your new organization, GFTM, work a lot on AI initiatives?
We are going to, I would say, a significant portion of our effort are dedicated to AI. In fact, there are 3 areas GFTM will focus. Tokenization, AI, and quantum computing. Overarching on top of that, digital public infrastructure, cybersecurity and consumer protection, and sustainability. So that's 6 areas we'll focus. And AI definitely is part of the whole future stack, because everything we see today will change. When I look at the 3 elements of future of finance, which is AI, tokenization, and quantum. AI will change the user experience along with the backend tools. Because now AI will change the backend itself, because the people who are going to process and engines are going to change. AI is not going to be like a traditional UX where you go to a screen and you choose something to buy. The AI will do everything for you. There'll be AI agents who are doing things for you. So the UX, user experience we know of banks will just go away. A new UX will come in. So that's AI. On the tokenization, the underlying financial product will not be the contracts we see today. It will be in a tokenized form. Whether it is money, tokenized deposit, whether it is a financial instrument, bonds, equity, contracts, long-term deposits are all in tokenized form, and they will be something we will be holding in our financial asset in that form,
including real estate and commodities.
So everything today we see in a paper contract form with the intermediary in between will convert to a tokenized form, and they'll be sitting in the banking system as our financial assets. And then comes a third layer, which is the quantum piece. Why quantum? It affects in 2 ways. Because the existing encryption standard has to change.
Change entirely.
Because it is not quantum proof. So that encryption standards will change. The computing capacity, I'll not say the computing power for doing complex processes will change a whole set of infrastructure we have today. So to me, that's what the infrastructure shift will be due to quantum computers. So together, UX, form factor, and the infrastructure will define the future of finance.
If we're talking of quantum, Sopnendu, only yesterday, I saw Arvind Krishna of IBM announcing that the new quantum computer that IBM is working on to be out in 2029 will have a power 20,000 times of current quantum computing, 20,000x of current standards, which will obviously change everything.
Yes,
how we do stuff.
the infrastructure impact of quantum is something quite. I think not everybody has come in terms with that. Sometimes the speed or the computing speed is not the issue. Dealing with complex mathematical problem could be the single biggest factor which will change the way we think about the computing infrastructure.
Now, Sopnendu, you've championed Masses or Singapore's Project Greenprint and public-private partnerships for sustainable finance. What progress has been made in using fintech to drive Asia's net zero transition? And what are the next big milestones, especially given the current politics about ESG globally?
Well, I think with keeping aside the geopolitics of ESG, I think the fact remains that the world needs to change its behavior when it comes to sustainability, without any doubt. And Singapore still remains committed to the net zero goals. And we have done a lot, from taxonomies to public policies to taxation. And we have put something called Greenprint. In fact, we went live last week. The first nationwide utility for green disclosure platform for small businesses and medium and micro businesses called Project Greenprint, or it's called Greenprint in the short. And that is a product which came out of MAS, and now it is commercially run with investors under the GFTN platform. So that's the infrastructure we have put in, and we are the first one in the world to put that infrastructure in a public space for a nationwide access to infrastructure to disclosure. So our effort has been the policy disclosure side, creating a marketplace so that when people do the disclosure, they have a net zero transition pathway. There is a need for solutions. So we put a marketplace for solutions to be available to these transition pathways. It's still a work in progress. And again, there are many standards out there. By some estimate, 45, 50 standards. But for us as a technologist, we are not really worried about different standards. As long as our systems know how to interoperate different standards, we can put great solutions out there. So the progress has been good, and I would say Singapore has not changed anything despite the geopolitical shift we see, which I think is a temporary shift in this space.
Okay. Let's move to embedded finance and super apps now. Over half of Singapore's fintech firms focus on digital transactions and blockchain, with super apps like Grab and Shopee integrating embedded finance. How do you see the rise of super apps reshaping financial inclusion and competition in Asia?
I would say embedded finance was always the outcome of last 10 years. The reason why APIs were created and manifested, reason why public infrastructure were manifested and created, reason why sectorial regulatory licenses you saw a change was primarily to push banking activity out of the banking apps or banking systems deep into the sectorial digital platforms, which means if I'm buying a ticket from a travel portal or a airline's website, I should be able to buy my travel insurance from that website without getting out and going to my banking apps. So, and that whole payment, externalization of payment, externalization of banking activity through APIs were all designed to embed financial services deep into sectors where the transaction is taking place. So embedded finance was always in my mind the ultimate outcome of last 10 years.
Okay.
And that's what you're seeing today. So whether it is a super app, one app trying to do everything, or there's stacks of APIs which can be consumed by the sector to integrate financial services deep into the sectorial transaction processes. Embedded finance is the ultimate outcome.
Do you think it's a solution to financial inclusion globally?
It is a solution to three things, I would say. It is a solution to understanding the need of a consumer at the time of where the need arises.
Okay.
What does embedded finance does? It comes to you when you need it.
Correct.
As against somebody telling you buy it.
Yeah.
The insurance, travel insurance is sold when you're buying a ticket to travel.
Correct.
You are sold a certain financial product when there is a certain change on your portfolio.
Yeah.
So there is this need-based. So that is one thing. The second thing I would say that embedded finance solved the cost of transaction. By embedding this financial services right inside into the sectors, you have removed the cost of a lot of cost of intermediaries in this process. Somebody's to go here, come to the system, do booking. So cost has gone down. Hence, the product pricing is being more attractive, more competition. Hence, inclusion gets a benefit out of it. Third, digital literacy or financial literacy, or even simple literacy of financial systems. Embedding it into a real economic activity, you reduce the complexity to know about financial systems. So now the consumers don't have to think that much, understand that much, their banking systems, banking processes, the time deposits, and all this thing. It comes to them almost intuitively in their day-to-day economic activity. So it made financial services more intuitive than it was before.
So do you agree that fintechs have played a bigger role than banks in financial inclusion?
Yes, because fintech operates in a small, agile way for a targeted outcome in real economy. So being small, being targeted does make them quite effective champion of financial inclusion. So if I'm a fintech, I want to solve a credit decisioning, I will make the best credit decisioning tool and go to banks, tell them buy it, and this is what it does. If I'm a fintech which is in the business of solving, let's say, FX problem, I will offer that and make it so cheap that I'll offer it to a lot of companies to do the FX transaction efficiently. So,
Sopnendu, you've been a banker for the first 2 decades of your career. You've been a regulator for the next decade of your career. Let's talk about regulatory fragmentation. With growing regulatory fragmentation and extraterritorial impact of rules on AI and sustainability especially, how can regulators collaborate to avoid stifling innovation? This whole concept of passporting fintechs, the whole concept of having regulations that are common across at least the major territories of the world, how far are we from that?
Well, passporting has been a very, I would say, utopia in many ways, passporting fintechs. I think on a scale of 10, ability to passport fintechs seamlessly, I would say 4 or 3, 10 being the highest one. I think it's just not pragmatic to passport fintechs so easily. Because different countries have different regulatory need, different conditions, different national interest. So simply agreeing on a multilateral basis that any fintech operating in this country will be automatically going to next country without any additional regulatory burden. While on paper it sounds logical, in reality it's very difficult. But there has been some pockets of announcements, some partial achievement between 2 countries are passporting their fintech. But in my 10 years, I have not seen the most eloquent passporting regime. yet, unless you are in a common economic zone like Eurozone and all these things. But I have not seen. It just seems to be very difficult to achieve, while logically it seems to be no-brainer.
Even within a continent like Asia, you don't think that's possible?
Difficult. I mean, I have not seen any good example. I mean, there are some bits and pieces here and there. When best passporting would be where? I mean, to do passport, let's take a step back. To do passporting, the fundamental has to be aligned. Let's say know your customer. Know your customer depends on the infrastructure of the country. So if I'm going to passport a fintech operating in a public KYC mode, like in India, to let's say another country which doesn't have public KYC infrastructure, immediately the system, the demand, the changes have to take place for the fintech to operate.
That's a challenge.
It's a challenge. So it's just not easy. Unless you have, when I hope 10 years from now, we all operate on a collaborative public infrastructure. So then passporting becomes simply going from this rail to other rail.
Correct.
But that's to be seen.
Let's talk about one of your passion, the Singapore Fintech Festival.
Yep.
The Singapore Fintech Festival now is the world's largest, attracting over 60,000 attendees annually. I was at the SFF last year, very impressed with it. What role has the festival played, you think, in shaping global fintech collaboration and investment flows?
Well, to me, Singapore Fintech Festival was, if there was no Singapore Fintech Festival, Singapore would have never achieved the success it saw at the large fintech hub.
Really?
Absolutely. It is not just a festival. The festival gathered, I would say, people around the world for 1 week to share information, to share challenges, to share opportunity. And it created the community we required to grow the fintech ecosystem. It was the single biggest reason why the Asia saw a rise in fintech ecosystem was Singapore Fintech Festival. After that came Hong Kong, other countries created, India followed with that. But nothing has been done as Singapore Fintech Festival purely by the diversity of people who participate. India has something called the Global Fintech Festival, but largely India. But come to Singapore Fintech Festival, 150 countries, well distributed. We have people coming from Afghanistan also. So able to attract 150 countries, participant at a very senior level, well distributed crowd to come in one place, capture the whole year story, whole year progress in one single event, and take that insight and then apply to your development agenda is magic. So Singapore Fintech Festival became the ultimate toolkit for Singapore to play a significant role in the global fintech ecosystem, which I believe today we are multi-scaling through GFTN network, building similar structures in Japan, Europe, Africa, in future Latin America and US. And we intend today, GFTN is world's largest primary network when it comes to engaging people at a primary level through conferences, roundtable, and workshops. We are the largest. If I take all the hotspots we are operating today globally, we're going to double down, triple down to 30 hotspots globally by 2030.
Wow!
And so by far it will be the largest community we intend to create, and it has got three clear participants: regulators, technologists, bankers, financial institutions, and the fourth one, the investors. All participate in equal ratio. And that's the beauty of the festival and the new network.
And you are here today in Istanbul for the Istanbul Fintech Week. And you are talking today about the next decade of financial transformation.
Yes.
Give us a sneak preview of what are you talking about?
No, I just shared with you. I'm going to focus on the unmet, unsolved challenges. I'm going to talk about AI, tokenization, and quantum computing. But given it's a 15-minute speech, I'll be giving a very high-level snippets of how we see the future shaping up. But it has to be in the context of where we started. And I'll be walking the path of over the next 15 minutes of my speech, a reflection on last 10 years, a reflection on next 10 years, and how do we think we can move forward.
Amazing. I'm happy I got much more time in the podcast today than you are giving the Istanbul Fintech Week. A difficult question, Sopnendu. Some critics argue that Singapore's fintech success has made it expensive for startups and SMEs, and the regulatory sandboxes favor well-funded players. How do you respond to these concerns, and what more can be done to promote a more broad-based innovation?
I think look. I would take this as a feedback, not a challenge, because there could be truth into this. Singapore is not a cheap place; it's an expensive place. Let's be clear about it.
Yeah.
And we don't intend Singapore to be home to every fintechs in the world. Fintechs should and will operate in different market based on their economics and their business plans. What Singapore is now trying to do through the GFTN network, trying to solve this problem. Because you don't necessarily have to sit in Singapore to do. So we are, through the GFTN network, which we're building, which is our next avatar of our fintech journey, is to provide that infrastructure, that support beyond Singapore through a distributed framework, right into the market where they operate, whether it's the Asian market or ASEAN market, or there's in Japan or in Europe or Central Asia, Central Europe or continental Europe or UK. We are expanding into this market. We are bringing policies, framework support in partnership with the central bank of those countries. So we are exporting those success factor right into the country where they're originating. So in that process, the cost will go down, the distribution becomes far more efficient, and the network becomes more stronger. Because you don't need to concentrate in one place. And Singapore still grows because it is part of the network, and we can make it easier for companies to innovate, and they don't necessarily have to operate from one location, because there's a capacity, and beyond that becomes not practical.
And that's one of your top priorities for GFTN as you transition?
To decentralize the success we saw last 10 years into emerging markets right into the country.
Excellent. Now, before I close, Sopnendu, I want to ask you a set of 8 or 9 rapid fire questions. No right or wrong answer.
Okay.
First reaction.
Yes.
That is possible, yeah? Which fintech hub outside Singapore do you admire most, and why?
I am biased here, and it has not really become a big fintech hub. It is Japan. And partly because of my long association with Japan, I want to see Japan becoming a very big fintech hub, because they have capital, trust, and strong ethics.
Excellent. What's the most underrated fintech trend today? Underrated.
Underrated fintech, and we don't give a lot of credit to that. Is called financial health.
Okay.
There are a lot of people who do financial planning, financial health, fintechs. They are quite underrated because the people think that's not required. But I think that the time will come soon with this all AI and everything, the role of financial health fintechs.
What's your most memorable moment from Singapore Fintech Festival?
Oh, my most memorable moment always has been that people ask me, where is the toilet?
Oh, really?
Because they see an organizer badge on me. And because such a huge festival, they think I can direct them to the right places.
Excellent. Central bank digital currencies, hype or inevitable?
It started with a response to a hype. It graduated to a thoughtful pilots, and now it has become a
reality.
A reality.
If you could change one regulation overnight, what would that be?
I would say the outsourcing guidelines. It's
Really?
quite tough.
Okay. Biggest myth about fintech regulation?
I think people believe fintech regulations are designed to prevent fintechs to do what they want to do. In fact, fintech regulations, if you look at carefully, is actually designed to make them successful. This whole notion, regulators are the barrier to fintech innovation. After spending 10 years with MAS, is one of the worst myths I've seen in the market.
But all regulators aren't Singapore.
No. Maybe because they may not be expressing that way. But you look at let me simplify in your podcast. You go to any regulator in the world. There are only 5 things they do, and they ask you to do. 1, know your customer.
Yeah.
Second, they ask you, please ensure you are not doing any transaction which is not compliant to terrorism financing and money
Correct.
laundering.
AML.
Third thing they ask you, consumer protection.
Yeah.
Ensure you are not doing things which is against consumers' interest.
Yeah.
Fourth thing ask you, maintain market integrity. Don't do systemic fraud or compromise the market.
Yeah.
And last is financial stability. There's 5 things they ask. And the 6th one they've added due to fintech called tech risk guidelines.
Mm-hmm.
The way they deploy this could be a fiction, the process and the procedure, but the intent is identical in every country. So I don't believe the intent of regulators to regulate fintech differs with any country. This 5+1 is same for everyone.
Fair enough. What's your favorite fintech product?
Favorite fintech product is my Pay Now.
Oh, okay, of course, your creation. And complete the sentence. Final question. Complete the sentence. The future of fintech is
more inclusive.
excellent. Sopnendu, thank you very much for your candid insights and for your extraordinary contribution to Singapore and the global fintech world. I mean, your legacy at MS and your new mission at GFTN are shaping the future of finance and innovation. So well done. And we wish you the very best in your next chapter.
Thank you, Suvo. And I hope your audience who are listening to this podcast do join me in my new passion, the GFTN. And together we are going to build the world's most inclusive and sustainable fintech ecosystem.
Money Majlis is proudly supported by Aqua Now, the premier crypto-as-a-service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
Money Majlis is brought to you by E&, a global technology group.
Money Majlis is brought to you by Intellect Design Arena, driving digital adoption in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
And that's it for this edition of Money Majlis. If you have enjoyed this podcast, please subscribe to Money Majlis or follow it and share with friends, family, and colleagues. If you have feedback or suggestions, please email me at suvo@moneymajlis.com. I look forward to hearing from you. And please do remember to visit my giving website, give.moneymajlis.com, to get and redeem your free $50 gift card for a charity of your choice. Money Majlis is conceived and scripted by me, produced by Sabine Achkar in Podster, and supported by Aqua Now, Emirates NBD, E&, Intellect Design Arena, and Network International. My giving partner is Good World. All profits from this podcast go to worldwide charities. Till next time, goodbye and ma salama. Stay well and do good.